Hello everyone, welcome to the May 22nd Friday market opening bell, your 10-minute guide to the stock market. Hong Kong stocks opened higher but closed lower. The Hang Seng Index opened up 182 points but was dragged down by the A-shares, finishing at 25,386 points, down 264 points or 1.03%. Total turnover reached 298.5 billion Hong Kong dollars. The X-share index closed at 8,475 points, down 129 points or 1.5%. The Hang Seng Tech Index closed at 4,768 points, down 104 points or 2.15%. Southbound funds recorded a net outflow of $6.105 billion from Hong Kong stocks. Among them, net buying included Wellcell Holdings at $1.241 billion, SMIC at $805 million, and CNOOC at $425 million. Net selling included Tracker Fund at $2.475 billion, Alibaba at $1.527 billion, Tencent at $1.085 billion, Sunny Optical Fiber and Cable at $262 million, and Huawei Semiconductor at $257 million. Statistics show that southbound funds have bought SMIC for 5 consecutive days, totaling $4.27 billion, and CNOOC for 4 consecutive days, totaling $1.754 billion. Notably, Wellcell Holdings shares experienced a flash crash, plunging more than 83% to $0.83, with turnover surging to over $4.6 billion for the day. Technically, the Hang Seng Index has broken below the key support level of 25,500 points and continues to fill the upward gap created on April 8th. This gap lies between 25,254 points and 25,668 points, and there is a high probability that it will be fully filled. The 3 major A-share indexes opened higher by 0.3% to 1%, but quickly lost momentum, closing down 2% to 2.4%. The Shanghai Composite Index finished at 4,077 points, down 84 points or 2%. The Shenzhen Component Index fell 322 points or 2.1% to 15,247 points. The Chinex Index dropped 92 points or 2.4% to 3,829 points. Combined turnover for Shanghai and Shenzhen markets reached 3.49 trillion yuan. The renminbi central parity rate against the US dollar rose 48 pips to 6.8349 per US dollar. Sunny Optical bucked the trend and rose, closing at $68.60, up 9.3%, making it the best performing blue chip of the day. This was driven by Tesla announcing that its supervised full self-driving FSD will be available in 10 countries, including China. The news directly boosted Hong Kong's autonomous driving and sensor sector. Tesla has always adhered to a pure vision approach in China, without relying on expensive and complex LiDAR. The entry of FSD into China significantly increases demand for high-precision in-vehicle cameras. To support FSD upgrades such as Tesla models will require multiple high-end 8-megapixel vehicle cameras. As a global leader in vehicle camera market share and a core Tesla supplier, Sunny Optical will directly benefit from higher Tesla production volumes and the average selling price uplift from upgraded lens specifications. Facing intense competition from FSD, Chinese domestic leaders such as XPeng, Huawei, BYD, and NIO will accelerate the rollout of their own advanced intelligent driving technologies. Unlike Tesla, Chinese car makers mostly adopt a fusion perception solution of LiDAR plus more cameras, with vehicles often equipped with 11 to 13 lenses. Sunny Optical is also the absolute core supplier to BYD, Huawei's ecosystem. Geely, and other domestic brands. The overall evolution and upgrading of China's intelligent driving market will bring Sunny Optical far more incremental orders than from Tesla alone. Hong Kong China Travel plans to spin off its China Travel Hong Kong Macau cultural tourism business via introduction listing. The stock rose as much as 32% intraday before the gain narrowed sharply, closing up over 5%. China Travel Hong Kong Macau cultural tourism positions itself as a Greater Bay Area cross-border cultural tourism comprehensive service provider with total revenue of approximately 2.198 billion Hong Kong dollars in 2025. It holds a leading position in tourism infrastructure in the Guangdong, Hong Kong, Macau Greater Bay Area. Management of Hong Kong China Travel stated that the spin-off is mainly to unlock asset value. The parent company will retain mainland scenic sport businesses such as Sha Po Tou and Window of the World, which are growth assets requiring continued investment. The spun-off Hong Kong Macau cultural tourism business complies passenger transport, hotels, dock and document services, is a value asset with rigid demand, low volatility and extremely stable cash flow. After the spin-off, it will focus on stable dividend payouts to attract long-term investors. NetEase releases Q1 2026 financial results showing net revenue of 30.6 billion yuan, up 6.1% year-on-year, and beating market expectations of 29.51 billion yuan. Gaming and related value-added services revenue reached 25.7 billion yuan, up 6.9%, beating estimates of 24.71 billion yuan. Innovation and other businesses revenue was 1.55 billion yuan, down 4.6% versus estimate of 1.58 billion yuan. NetEase cloud music revenue was 1.981 billion yuan, up 6.6%. NetEase Youdao revenue was 1.348 billion yuan, up 3.8%. Gross profit was 21.2 billion yuan versus estimate of 19.11 billion yuan, pushing the overall gross margin to 69.4%. Under non-GAAP, net profit attributable to shareholders was 11.3 billion yuan, a slight 0.34% increase year-on-year, but significantly beating market expectations of around 10 billion yuan. Adjusted earnings per share from continuing operations was 17.46 yuan versus estimate 15.47 yuan. The highly anticipated open-world anime game Infinity is progressing steadily, while the heavyweight naval game Forgotten Sea will begin its third closed beta test on May 28th. The market widely expects this title to become a major new growth driver for NetEase in the second half of the year. Tongcheng Travel announced in its Q1 2026 financial results, showing steady growth. First quarter revenue rose 14.4% to 5.0058 billion yuan, meeting and slightly exceeding market expectations of 4.943 billion yuan. Reported GAAP net profit was 779 million yuan, up 16.5% year-on-year, with earnings per share of 0.33 yuan. Adjusted EBITDA increased 19.8% to 1.389 billion yuan, and adjusted net profit rose 19.4% to 941.1 million. Today's newly listed stock, Tenor Therapeutics, traded at $147 in the gray market on Philip Mart yesterday, 94.2% or $71.3 above the listing price. Excluding fees, each lot of 50 shares would yield a paper profit of $3,565. US President Trump says willing to give Iran time to review latest Washington peace proposal, but insists on preventing Tehran from developing nuclear weapons. Oil prices fell for the third consecutive day, while the Dow Jones hit a new all-time high. The fear gauge VIX index dropped 0.68 points or 3.9% to 16.76. The Dow Jones rose 0.6% to 50,285 points. The S&P 500 gained 0.2% to 7,445 points, and the Nasdaq edged up less than 0.1% to 26,293 points. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks, fell 101 points or 1.5% to close at 6,659 points. All sectors rose except for consumer staples, energy and industrials, with utilities leading the gains. Nvidia fell 1.8%, making it the third largest decliner in the Dow. Company CEO Jensen Huang said that as U.S. export restrictions continue to reshape the global AI chip landscape, Nvidia has essentially ceded the Chinese AI chip market to Huawei. He noted that demand in China is very strong after Nvidia's withdrawal. China's domestic chip ecosystem has developed very well, and Huawei's strength is also extremely robust. Huawei set the record last year and is very likely to deliver extraordinary performance again in this coming year. Huang expressed caution about the prospects of China recently reopening its market, stating that the company has already warned investors not to hold any expectations regarding approvals for selling advanced chips to China. However, if the situation improves, the company still hopes to return to the Chinese market. AMD rose 0.4%. The company plans to invest more than $10 billion in Taiwan's semiconductor industry to expand strategic partnerships and increase advanced packaging capacity needed for AI infrastructure. AMD also announced that it will begin manufacturing its next-generation Venus Central Processing Unit in Taiwan using TSMC's 2nm technology and plans to produce a chip at TSMC's Arizona fab in the future. Walmart fell 7.3%, becoming the largest decliner in the Dow and the third largest in the S&P 500. The company reported second quarter total revenue ended April 30, rose 7.3% to $177.75 billion, beating expectations of $174.84 billion. Adjusted earnings per share increased from $0.61 a year ago to $0.66, in line with market expectations. Walmart guided current quarter adjusted earnings per share to between $0.72 and $0.74, below the market consensus of $0.75. The company maintained its fiscal 2027 outlook, expecting adjusted earnings per share of $2.75 to $2.85 and sales growth of 3.5% to 4.5% at constant currency. The market currently expects non-GAAP earnings per share of $2.92 and sales of $749.05 billion. DIA fell 5.2% among the weaker performers in the S&P 500. The company reported second quarter results ended May 3rd that beat market expectations and reiterated a soft full-year profit outlook, reflecting continued pressure in the global agricultural market. Earnings per share declined from $6.64 a year earlier to $6.55, while net sales rose 5% year-on-year to $11.78 billion. The market had expected earnings per share of $5.78 and sales of $11.55 billion. Their forecast fiscal 2026 net income of $4.5 billion to $5 billion, compared with analyst prediction of $4.75 billion. The The company recorded net income of $5.03 billion in fiscal 2025. The S&P Global US May manufacturing PMI preliminary reading came in at 55.3, the highest in 48 months, above April's 54.5 and beating expectations of 53.8. The Services Business Activity Index edged down from 51 in April to 50.9 in May, missing the expected rise to 51.2. However, the Philadelphia Fed's May manufacturing index fell sharply from 26.7 in April to minus 0.4, worse than the expected 17.8. Separately, U.S. housing starts in April dropped 2.8% month-on-month to an annual rate of 1.465 million units, higher than the expected 1.41 million initial. Jobless claims for the week ended May 16 fell to 209,000 from the upwardly revised 212,000 the previous week, better than the expected 210,000. Our stock pick today is GPIXEL Changchun Microelectronics, stock code 3277. GPIXEL Changchun Microelectronics is primarily engaged in the design, development, testing, and sales of CMOS, complementary metal oxide semiconductor, image sensors, CIS. The company offers 9 major product series and more than 50 standard products which are widely used in advanced technology fields such as industrial imaging, scientific imaging, professional imaging, and medical imaging. The group mainly designs and sells CIS for downstream customers in the industrial imaging and scientific imaging sectors. Operating in a fabless model, its products play a critical role in enhancing the performance and image quality of industrial cameras, scientific cameras, professional cinema cameras, and other imaging equipment. For example, in industrial imaging applications, the group CIS are used in manufacturing inspection processes such as alignment error detection in lithium battery production. In scientific imaging applications, they are used for DNA sequencing imaging, confocal microscopy, and fluorescence cameras. According to Frost & Sullivan data, in 2024 the group ranked third globally among CIS companies in industrial imaging revenue with a 15.2% global market share. In scientific imaging revenue for the same year, it also ranked third globally, holding a 16.3% market share. The group has delivered steady performance growth. Revenue increased from 604 million yuan in 2023 to 674 million yuan in 2024, and further to 856 million yuan in 2025. Net profit attributable to shareholders rose from 174 million yuan in 2023 to 198 million yuan in 2024, and then to 294 million yuan in 2025. Gross margins over the past 3 years were 63.5%, 59%, and 66.9% respectively. From 2020 to 2024, global CIS revenue grew from 127.5 billion yuan to 139.1 billion yuan, representing a compound annual growth rate of 2.2%. The market slowdown between 2021 and 2023 was driven by weak consumer electronics demand, channel destocking, and price pressure following the end of pandemic-era orders. Although consumer applications still accounted for over 71% of the market in 2024, the mix continues to shift toward higher value segments, such as industrial imaging, recorded at 12.2% CAGR, medical imaging 29.1%, and scientific imaging 10.3% from 2020 to 2024, all growing faster than the overall market. Looking ahead, global CIS revenue is expected to recover from 155.5 billion yuan in 2025 to 210.3 billion yuan in 2009, with a CAGR of 7.8%, supported by demand recovery and rising contributions from automotive, industrial, and medical applications. Growth will also be driven by higher average selling prices due to more cameras per vehicle, increased resolution, added features, and the adoption of stacked CIS, global shutters, HDR, and Ni12 technologies. By 2029, professional-grade CIS is projected to reach 9.1 billion yuan, with a CAGR of 7.3%. Medical imaging, 8.8 billion yuan, with a CAGR of 24%. Industrial imaging, 7.8 billion yuan, with a CAGR of 21%. And scientific imaging is expected to accelerate to a CAGR of approximately 12.7%. The industrial and scientific segments are anticipated to outperform due to higher factory automation and machine vision penetration, specification upgrades, the replacement of CCD with CMOS, more stable plant procurement cycles, and lower exposure to consumer-driven inventory fluctuations. Recommendation: buy at $88, target price $99, stop loss at $83. I do not hold the above stock.